This concept covers 3 types of death that insurance can account for. And when we think of life insurance, we only think of the first type of death, the physical death. But broaden your thinking and remember that life insurance is asset protection. It's covering your economic life value.
You are your number one asset. The first thing you should be investing in is yourself, because your ability to earn income on this earth or in this country is the best asset you have.
The risk of becoming disabled before 60 is several times greater than the risk of dying before 60. So this might have a higher price tag than a physical death, and it also is more likely to occur.
Whole life insurance, especially the way we do it, specially designed whole life insurance from a participating mutual company, guarantees those loved ones against that loss of your ability to earn an income. Imagine now, if you're in your 30s, you being that 1 in 3 who doesn't make it to 65. And what if it happens in the early end?
All right, welcome to Remnants Finance Podcast. Brian, good to see you again.
Likewise.
I don't know if you saw, but we were in the news. Justice Samuel Alito is flying our flag over his house, and it's caused quite the stir.
Yeah, I think it's particularly funny. I have one of those flags too. I have to hang another holder for my house, the exact same one. I have it. I had the flag sitting upstairs. I just haven't gotten the mounting bracket yet for it, because I have an American flag on one post and I want to put that flag on the other. I think it's funny that that's causing a stir out there. It's a flag commissioned by George Washington originally to fly over a naval vessel, and I think the year was 1775.
Yeah, and we kind of adopted it unofficially in our fight against the DOD and the COVID mandate. It doesn't, it's a historical flag, and we at Remnant Finance, that's the inspiration for our logo and the overall message. But of course, the retarded world of Twitter, just everything becomes a crisis. And last week it was the legend, my fellow Georgia Tech alum Harrison Butker, making a killer speech that with a great message, and of course people that don't even know who he is are outraged and trying to track him down and insanity. But and I actually tried to. My wife's a Patriots fan. My in-laws are all from New England, and so I don't buy sports memorabilia, that kind of stuff, but I actually went on and tried to make her a custom Patriots jersey on NFL.com, and I wanted to make her a Patriots jersey that said Butker number 7, because I saw a really funny caption that like Harrison Butker jerseys in women's sizes had sold out, which just shows you how much people are craving that kind of message and how powerful it is. And I think the fact that got so much pushback means he's right over the target, and the fact that our appeal to heaven flag that we modeled our company at, kind of the ethos that we want to embrace at Remnant Finance. It's kind of the calling card of idiots on the left with, oh, it's a January 6th thing, like that's fake, just absurd, news story that has pretty much been disproven by all of the documented evidence behind it. And it's like, anyways, I just, whenever you can kind of look at a news story and see how it's being posed and get an idea of how fake it is. And pretty much now, if they try to tack on January 6th to something, it's just narrative branding. It's kind of like if we're talking about the rules-based order and spreading democracy, fighting communism. Okay, that we're going to go in and destabilize a country and leave it in tatters in the name of spraying democracy all over them. So it's like the same kind of thing. I saw that and I was like, way to go. Justice Alito gets it. And that's a great flag. And there is no shame in representing some historical, foundational, not even memorabilia, just a representation of what our country used to stand for and bringing that back. And that's what we want to bring to our podcast, to our message, and to what we want to do at Remnant Finance. Anyways.
Yeah, absolutely. I actually want to talk a little bit more to that, if you don't mind, because I don't think we've ever talked about this, but I was first introduced to the appeal to heaven flag well prior to COVID and in 2020. One of our members of our practice and one of my closest friends, Brett, and he's one of our rock star clients, man. He he introduced me to it. I bet it was 2018. And there was a book by a gentleman named Dutch Sheets. Have you read that book?
No.
It's called An Appeal to Heaven. It's real short. I actually just opened up. It's a 100-page book. And I want to read a little excerpt here. Incredible, because all this well predates the stupid January 6th that's been run into the ground and wrongly um, pitched all these last couple years. But An Appeal to Heaven. What would happen if we did it again in recent days? You may have seen someone with a white flag displaying an evergreen tree beneath the phrase "An Appeal to Heaven." This banner has made its way into countless homes, prayer rooms, and even government buildings. The Appeal to Heaven flag holds great significance as it relates to America's founding, God's eternal covenants, and our present hope for this nation. In An Appeal to Heaven, Dutch Sheets takes you on a journey of discovering the role you were designed to play in America's history. This short book is packed with powerful insights that will help you pray for America and leave you equipped to be part of her restoration. You have a role to play in this story. Are you ready to take your place? And so that's a little excerpt on Amazon. The book was published in 2015. It's just funny. And, and here behind me, the guy who commissioned it, George Washington. So I don't know. Maybe now he's a J6er. I'm not sure, since he's the guy that was down with the Appeal to Heaven. But speaking of sports memorabilia, I don't buy it either. But I just want to point out that I do still proudly display the greatest center fielder in Pirates history, Andy Van Slyke, who you probably never heard of, but he was probably the coolest guy of the 90s, the last time they were like really good, 90, 91, 92. I just thought that was funny. I saw him pop up on something the other day, and I was like, of all people, it's like, if you weren't in Pittsburgh of that era, you probably have no idea who he is, but he was like my childhood idol.
Nice. Well, we always want to be unapologetically American at Remnant Finance, and we're gonna rock the Appeal to Heaven ethos pretty hard. And it's interesting. One more final tangent before we get to our topic today, which is the three forms of death. We are going to talk about insurance today, but one quick story. When I was doing my grad program, it went remote because of COVID, and so that was right around the election. And as soon as we had the new quote administration in place, the new Secretary of Defense mandated that the entire DoD get extremism training. And I remember I was talking to my wife about how prior to that, I remember one of my COs being forced to give transgender training. And I told her, one day, if I continue in this job, I will be forced to give that training, and I'm not going to do it. Is that a hill to die on? I don't know. But when I get there, I'm not gonna give training on something that I don't believe in. But am I gonna risk my career over that? Is that actually a hill to die on? I never made it to that point with the Navy because I got booted effectively by refusing the COVID shot, and that was a super easy one. Yeah, of course that's a hill to die on. Um, but I remember that same training, the extremism training that they gave us in spring of 2021, where they told us that basically, you know,
Now, I think it was 2022. Because I
2022.
have a story. Yep.
Yeah, we were in Stowe, Vermont. We were skiing. I was doing my online classes, taking advantage of the fact that my grad program had gone remote. And I'm sitting through this training, and they're running through a list of flags or symbols that were deemed to be extremist ideology. And one of them was the three percenters, which is just the Roman numeral three surrounded by stars. And I know what that is. There's a ton of guys in the military that have that tattooed on them because all it means is it's representative of the fact that during the Revolutionary War, an estimated 3% of the colonists took up arms and fought the British. So there's no group, there's no leader, there's no organization. It's just a symbol. And I remember they said that that is extremist ideology. So I went online and bought decals for all of our vehicles that had that. Just not because I'm not like a decal guy. I'm not a political guy. I don't ever do political bumper stickers, anything like that. I don't even vote. But I bought those for us, and I got a T-shirt and stuff like that to wear around base, just because it's so absurd. And little did I know at the time that my career would be totally derailed. And thank God, because now I'm doing this, which I absolutely love. But it's just funny seeing that story in the headlines like it's a bad thing that Justice Alito had that flag. So hats off to Justice Alito, and I hope you guys will stick with us as we try to keep that spirit alive. But we're going to talk about the three
Hold
forms
on
of
a
death
second.
today. Yeah,
Hold on a second. I wanted to say that's funny because I'm glad that you mentioned that you don't do a bunch of bumper stickers, because I think that the amount of bumper stickers on the back of somebody's car and their level of psychosis are directly correlated most of the time, or how crazy they are. You know, one or two, cool. You can put your kids stuff, but if I see 30, I've never met somebody that has 30 bumper stickers on their back of their car that is normal.
yeah,
By normal, you know, not a little crazy, but it's funny.
yeah. And I never thought about this way until recently. But the idea of wearing another man's name on your back when you go to a sports game or something, that never struck me as weird. But it is kind of strange to go to a stadium, and like I have some jerseys, but I don't really wear them anymore. I don't go to stadiums, but um, it is kind of weird that you're wearing
It is
another
weird.
man's name on your back. And it's kind of the same with a political bumper sticker. It's like I don't need a politician to dictate anything in my life. I don't depend on them for anything. I don't really believe in how they get where they are. I don't really buy into the system. That's a longer conversation for probably down the road here. But you know, I
Well,
I just I don't do bumper stickers. I don't do men's names on my car or on my back.
I don't either. I don't wear them at all. I think I have, you know, one old like Bettis jersey or something in my closet that I don't know when he retired, what, 07 or something like that. You know, I was a little younger and dumber. But it's funny you talked about the extremism training before we start on the topic of this, but we did the same thing, which is how I remember it being probably early 2022 or at the worst, very late 2021, because it was after the COVID mandate started. And you know, that was the battle I was in. And you and I, that's where we met. And we were just diving into regs, reading the Bible, diving into laws, diving into medical journals, whatever we could. It was just like I never studied so much stuff that had no prior interest in up
Yeah,
until that moment in my life, especially law and everything. And when we had to sit in that thing, I think it was supposed to be like a 4 or 6 hour training, something like that, that extremism training. They made our chaplain do it, who identified as a 3%er. So it was kind of funny, but I remember them talking about that in the very beginning, and he was just like, "I'm sorry, I kind of have to do this," and you're in a room where probably at some point 90% of the people in that room were being identified by our own government, who they're sending off to war. And but you know, it was like we were in such a big battle that wasn't my hill either, but I still had to show some form of dissidence. So in a room full of officers, I stood up maybe 10 minutes into the 4 hour training, and I just walked out, and I never came back. I went back to my office and I sat there and did whatever. I was probably started researching more COVID crap for the fight we were in. And you know what? I got credit for the training, and nobody ever said a word to me. So that's about all I could handle at the moment. You know, in hindsight, I wish I would have stood up and countered all the stupid stuff and all the propaganda that the government was giving us, but I didn't have the brain cells or the fortitude in the moment to do it. I had too much other pressure on my shoulders.
yeah. Well, if anyone can find a Patriots jersey where they can customize with Butker's name on it, that's one that I would buy. But NFL won't let you do that, and so I think
I mean,
that
I'll see if I can get her a Steelers jersey, but I'm not buying that Patriots crap. Anyway, let's talk about the three forms of death, man.
the three forms of death. This is a concept. This is foundational to life insurance. This is from the Economics of Life Insurance book by Solomon Hebner. This is back initially. First edition was in the 20s, I believe. Brian's holding it up there. The copy that we both have, that is extremely hard to find online. You're going to pay a couple $100s for, is from, I believe, the 50s. So this concept covers three types of death that insurance can account for. And when we think of life insurance, we only think of the first type of death, the physical death. But broaden your thinking, and remember that life insurance is not just it is insuring your life, but more deeply what it's doing, it's asset protection. It's covering your economic life value. And there's three different ways that you could lose that economic potential, and we're going to cover those.
So one of the primary things that life insurance does is it's going to guarantee your dependents, your loved ones, if you have any, or if you have dependents, I should say, I'm hoping you have some loved ones, but it's going to guarantee those people that count on you against economic loss, against the loss of whatever your current earning power is. Because we've talked about it before, and let me reiterate, you are your number one asset. The first thing you should be investing in is yourself, because your ability to earn income on this earth or in this country is the best asset you have. Your income potential is your greatest asset. I can't say it enough. And so, in any of these three forms of death that we're going to discuss in a moment, the loss of that current earning power, but really, I think to even expand on that is your future earning power, because if, I've never earned less than I did in the past, other than maybe a minor blip here or there. But most of the time, Americans are going to earn more throughout their lives, and they're going to hit their maximum economic potential probably in their 50s, maybe even 60s if they continue to produce. So, whole life insurance, especially the way we do it, specially designed whole life insurance from a participating mutual company, guarantees those loved ones against that loss of your ability to earn an income in any of the death forms, which Hans will discuss the three.
Yeah, so the three forms of economic death that Solomon Huebner talks about, of course, you have your physical death, or he sometimes refers to as casket death. You've got your disability death, and you've got your retirement death. And when we say death, we associate obviously loss of life. But in this case, death means loss of income earning ability, losing that asset that provides for your loved ones. So the physical death, the numbers that he cites in the book are what we're going to use here. Remember that these are from the 1950s. And so about 1 in 3 workers at age 30 dies before the average retirement age of 65. What that would look like on an actuarial chart is you take the entire selection of people that are, say, 30 years old, and you say how many of them will make it to retirement age. Well, 2 of them, statistically, 1 of them will not. So that physical death is going to truncate the amount of working years that that person has to provide for their family. So in this form of death, life insurance insures their income for that remaining span, for that 1 in 3 statistically who's not going to make it in physical body to the age of 65. This is a total loss.
If you're thinking about it, if you're listening to this, most people, if you're thinking of somebody who's 30 years old, broadly speaking, I think a lot of our listeners and a lot of our clients tend to be men and fathers. They're early in their career, or early, I should say, in their fatherhood, or early in their marriage, or it's like, imagine now if you're in your 30s, you being that 1 in 3 who doesn't make it to 65. And what if it happens in the early end? So you're 35 years old. Maybe your wife is staying at home right now and has been out of the workforce for the last 5 years. You got 2 young children. I'm almost describing Hans right now, and
Yep.
I'm a little bit older than him. And all of a sudden, you've left them with all of your future income. It just came to a stop.
It's
What
vanished.
would they do? Could they maintain the lifestyle you have? It's just a massive thought. Actually play that through, especially when you think about 1 in 3 at this time. Things have changed. Jobs are probably a little bit safer, especially on the labor side of the world, the blue collar side of the world. And I don't know what to think of health, like medicine's increased, but then people are less healthy. The numbers might be a little different, but I guarantee it's substantial, even if it's 1 in 5. I don't know the current numbers, but that's a 20% chance of you not being there to support your children and knowing the potential of their hopes and dreams just quitting with you.
And we think about the other types of insurance we have: property insurance, car insurance, home insurance, etc. Those are insuring against what's typically a partial loss. You you might wreck your car and get it repaired with your insurance that you were required to have, but then you still have the car. Or you might make a repair on your home, fix the roof, whatever. The home is still there, but in this case, we're talking about a total loss when you walk off this earth. And if you're not prepared for that, then you are depriving your family of something that you have a moral obligation to provide for them. So that's the first death. That's the physical death. The next death would be permanent disability, or as he calls it, a living death within the working period of life. So you're still alive, but you are no longer able to provide that income. This might actually be worse than a casket death if you're looking strictly in economic terms. Of course, your family would rather have you disabled and present than than dead, but you are now a cost to the family as well. And so at least, and again, this I'm not trying to sound dismissive here, but if we're solely focusing on economic value, when you die, at least your expenses for you to stay alive die with you. And so your family has to move on or has to continue on for the remainder of their lives without your income, but they're not also having to provide for you. And so in a sense, this permanent disability could be worse economically in that not only do they have to continue on without your income, but so do you. You've added another consideration that you're going to have to cover without that income.
And potentially at massive expense.
So you've disappeared as a working force, even though you are still a consumer. And this might be, depending on the disability, if you're adding a large medical bill on top of that to keep you comfortable as you are no longer working but still living, you might be incurring even more cost than you would have been otherwise. And actuarial statistics, the risk of becoming disabled before 60 is several times greater than the risk of dying before 60. So this might have a higher price tag than a physical death, and it also is more likely to occur than a physical death. And it's something that you should be preparing for, and incidentally, something that we can prepare for while practicing IBC.
Yeah, and we want to have a whole episode on this because we think it's important. But for those that qualify, it's called waiver of premium without or waiver of premium for disability, and it's like an insurance within the insurance. Whereas if something happens to you and you become permanently disabled or disabled for 6 months, and you're too sick or too hurt to work, if you qualified for that, the insurance company picks up the premium and that way your savings plan within life insurance completes. So it's one less bill you have, and it's still protecting your future income or the income that has been lost rather. Phenomenal product, phenomenal rider that goes on to the way we design policies, and we always recommend it. And finally, the third, quote unquote death that he calls the death to your income is your retirement death. And quotes, or excuse me, Hans said this before: life disappears at this point as a working force, but it continues as a consumer. And every day is a Saturday at this point, especially early. There was a book that came out in the 90s. I can't think of who wrote it, where he describes, and a lot of people talk about it, the go-go years, the slow-go years, and the no-go years. But if you live a long enough time in retirement, you're gonna have to survive quite a few years without income. And the way we position our assets and our protection is going to determine what kind of years those are. And the crazy statistic, again, that comes from this book, again, in the 1950s, we didn't update the statistics, but 6 of 10, so 60% of people who survive to age 25 are also going to survive all the way to retirement age. So they need to be making provisions for this future economic death where they're going to continue living without earning, or potentially without earning.
Yeah, and this type of quote death is not a bad one. It's the entire basis for the conventional planning model. It's the only one they focus on. And so we all want to make it to retirement age and beyond. We all want to live a full life. And, retire doesn't mean the same thing to us. We don't really buy that as we'll mention a lot, but even by that the traditional retirement model, we all want to make it there. And so this isn't a bad thing, but this is a loss of income, and it's a planned loss of income. It's an intentional loss of income, but it's one where you do continue as a consumer. And so it's something we need to plan for as well. And what we do with life insurance effectively mitigates all three of these. It doesn't just focus on the retirement and death.
Yeah, and in this final one, this retirement death, though, there's a fantastic little book by Tom Wall called "Permission to Spend," and he shows how this asset that we love, life insurance, whole life insurance specifically from a mutual company, gives you the permission to spend your other assets at a higher rate, at a safer rate, and just simply to use it without fear of what you leave your loved ones. So when that income ends, what we do is position people to continue living the way they want to live with life insurance.
So what we do with life insurance, that product alone protects you against all three types of death. There's there's some really impactful points that Hebner makes. And again, we tend to naturally focus on the perspective that we both hold and that most of our clients currently hold, which is that of being a father and the primary breadwinner for the family. And these are kind of hard hitting points, and they might be a bit uncomfortable, but I think that these are really important that we need to. These are ideas we need to grapple with. He says to not adequately insure is to gamble with the greatest economic risk confronting man. If and I'm paraphrasing here, if you understand the gamble that you're taking and you continue to proceed with only focusing on retirement death, i.e., the conventional model, that gamble is particularly selfish since the blow, if the gamble is lost, falls upon an innocent household whose economic welfare should have been the family head's first consideration. And so most of us come to the table when we sit down with someone and when we looked at our own pictures before discovering and implementing IBC, the only focus we had was growth and rate of return. Our primary consideration as fathers is the economic welfare of our household. And are you taking a gamble that you're going to make it all the way to retirement age? Are you gambling that you will provide income all the way to that retirement death, so to speak? And if you are, you all of your eggs are in the basket of you not being a statistic.
And not the failure to safeguard your dependence against this potential loss. And a quote that I love that we got from our mentor Trent is, "We all live until we don't." And I'll probably repeat that over and over on this show because it sounds so simple and silly, but it's just, if you really sit down and think about it, it's really impactful. We all live until we don't. And I don't have a lease on life. Do you, Hans?
I do not.
I haven't met anybody else who does either. So when you think about that, none of us know our last moment and the last breath we're going to take. So not safeguarding your dependence against the loss of your current income as a breadwinner, whether you're male or female, like we said, I tend to think of a father and as a husband and as the primary breadwinner, but it doesn't matter who it is. It's almost a crime to know that, like, you had the possibility to protect your income and let your family live forward as if you were there, at least financially, obviously not in any other way, and you didn't do it. The choice is there. It exists. You should at least start to shore up that protection side. And it's a moral imperative, in my opinion.
Yep. And what we do with life insurance is the opposite of gambling. If you're taking that gamble that you're going to live and produce income all the way to retirement, and that is your sole strategy for protecting your household, that's gambling. What we're doing is the opposite. We're creating certainty within the greatest uncertainty that exists, which is how much longer you have on this earth.
Yeah. We're matching a guaranteed event, your death, with a guaranteed outcome, a death benefit.
A great quote from Hebner is, life insurance is time insurance. It protects the insured against the financial consequences that result from a loss of time through premature death or the living death by guaranteeing to him the full estate that he had resolved to accumulate but was prevented from completing because of untimely death.
So it's a short little episode. This one kind of hits hard. Doesn't play necessarily to IBC, so we didn't talk like we normally do about how to utilize this as a cash flow mechanism. This one was really all about protection from, as Huber puts it, the three types of death, and what that means, and the moral imperative around it to your family, to your loved ones, to the legacy you want to leave, and making sure that the people around you are taken care of on the death benefit side. It's so important, and it's so important to make this a guaranteed asset that lasts your whole life through whole life insurance.
We have yet to come across someone that we've worked with who can't implement this, and with the great misunderstanding that many people start out with of the product, they just assume that I can't afford it because it's an expense, and yeah, this sounds great, but I can't implement that, so I'm going to go try to chase the returns and do the conventional planning model. But you can implement this. This is, if you are not protecting your family in this manner, It's a decision that you are consciously making, and a lot of people haven't thought about that.
And how awesome, man, that that we can protect our family against all of this loss, because this is like a little bit of a weighty episode, man, and we're just thinking about all the possibility of getting disabled, dying young, and running out of money in retirement. But how awesome that we can protect against those things, because those are risks that should be addressed. But in doing so, we can lift all of our financial boats. We can leverage that money now. We've already talked about the living benefits in the prior episode that listed like 20 some of them. We could take advantage of the financing of our lives. We can increase the size of our family banks. We can leave a larger generational legacy. Like, by doing this, by protecting against all these negative things in a guaranteed environment, everything else we do gets financially better. Like, that's amazing. And when you think about that, I've never felt good about writing a premium for my car insurance. But I look forward to writing large premiums in life insurance, because I know I can benefit from it now, and my family's going to get millions when I die.
Yeah,
That's cool.
yeah, we can help you create an estate where one otherwise doesn't exist. That's so powerful.
Amazing, man. I love doing this. And hey, I hope you guys will reach out. I hope you guys will comment. Please reach out to us if you want to talk any more about this, or if this hits home for you and you are a breadwinner, you're a head of household, you have children, you're male, female, fathers. If this hits home for you, man, please think about protecting your family, and at the same time, enriching your lives while you're living. So, in short, as we always say, stop being a passenger in your family's financial future, and it's time to boldly take control of your wealth.